Ladies and gentlemen, good day and welcome to the SPANDANA SPHOORTY Financial Limited Q2 and H1 FY21 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Padmaja Reddy, Managing Director of SPANDANA SPHOORTY Financial Services Limited. Thank you and over to you, ma'am.
Thank you. Good morning and welcome you all to the quarter 2 of financial year 21 financial and business update call of Spandana. Glad to share that we got one more rating done in this quarter by India Ratings. They awarded A stable, which is one notch higher than our current ICRA rating, which is A minus stable. SMERA has also done code of conduct assessment and they awarded C1 grading, which is the highest grading that they give to microfinance institutions. Second quarter has been very encouraging as it gave a hope of revival with the absolute value of collections increasing from 493 crore in Q1 to 1566 crore in Q2 and loan disbursements increasing from just 49 crore in Q1 to 1634 crore in Q2. While we were to deal with many administrative problems in Q1, in Q2, we could focus on meeting borrowers and regularized center meetings. Compared with Q1, though the demand reduced by 144 crore, however, collections increased by 218% in absolute value terms. We resumed center meetings in this quarter and we are able to complete collections within the scheduled time and our staff were able to spend time on loan disbursement, which was not possible in Q1. We disbursed 900 crore in September, which was all-time high in the last 3 years. We got back to pre-COVID monthly disbursement of 800 crore to 900 crore in September and October. This quarter, the portfolio grew by 519 crore from 6,835 crore to 7,354 crore. However, having not disbursed loans in Q1, we have many borrowers who closed loans and were waiting for the next loan. We disbursed loans only to the existing borrowers who closed their loans. We have 90 new branches opened 6 months prior to lockdown and these branches are operating with very low volume of borrowers and portfolio. These branches started acquiring new clients and in this quarter, these branches added 45,000 new clients. We raised 2,548 crore since lockdown till October. Of this, 350 crore is raised through capital market instruments. We also added 4 new banking relationships in this quarter, including Indian Bank and Federal Bank. Cash balance at the quarter end was 462 crore. So we have another 2,000 crore worth of sanctions in pipeline. Collection efficiency increased to 124% and 129% in September and October respectively. This includes, of course, the pre-closures and overdue collections. That is why the collection efficiency number is over 100%. While the demand was 519 crore and 501 crore in September and October, collections were 646 crore and 649 crore in September and October respectively. Collection efficiency without pre-closure was 103% and 110% for September and October respectively. This quarter also, for the third consecutive quarter, including March and also June and for September, so we made 114 crore provision only in this quarter and making the total COVID provision to 332 crore. This is 6.1% of to on-balance sheet portfolio as on 30th September 2020, and this is equal to 4.5% of the overall AUM. So till October, we collected 2,707 crore as against the total demand of 3,911 crore, which is equaling to 69% collection efficiency. The cumulative collection efficiency increased from 55% in Q1 to 69% by September. So this is equal to 40% of the opening portfolio, which was there on 1st April, that is 6,829 crore. So which means whatever the portfolio that was there on 1st April, so 40% of that portfolio has already been collected against a total borrowers of 25.8 lakh. So 24.2 lakh borrowers, they paid either all installments or some of the installments till August, and we still have 1.6 lakh borrowers. Either they have not paid, they paid less than one full installment, like they paid partial amount, or like they have not paid at all. These borrowers constitute 6% of the total borrowers. Of these 1.6 lakh borrowers, 1 lakh borrowers are from Orissa, Maharashtra and MP, these three states, and they constitute 48% of the total portfolio. South and central part of India is doing great, with almost every branch hitting 98% collection efficiency. Orissa and Bihar have improved a lot, particularly Berhampur and Ganjam. So the borrower spouses, like they have gone back to their workplaces, like Hyderabad, Ahmedabad, whatever the reverse migration that took place in April, May, like they again went back to their workplaces. And in the last month, like some of the places, we have seen substantial improvement in the collection efficiency. So like Bihar and Orissa, we have seen 15% improvement in the collection efficiency. But however, like certain zones like Jajpur and Bhadrak, so still the collection efficiency is lower at 75 to 85%. However, so like Chhattisgarh, Kerala and Orissa, like these three states, they are still below 85% collection efficiency, and we expect them to improve by December. So despite few states troubling us, we recorded strong growth in AUM. The AUM grew by 36% YOY from 5,407 crore to 7,354 crore. State level, district level diversification is very much intact. Three largest states constitute 47% of the total portfolio, and however, we want to bring it down to 45% in the next 6 months, with each state falling below 15%. Out of total 282 districts, only 12 districts have more than 1%, and no district is more than 2% of the total portfolio. For operational efficiency, so those branches like having more than 3,500 borrowers, we splitted some of the existing branches. As such, we opened 16 new branches in the last quarter. So we continue to service all the lenders during moratorium and post-moratorium as well. So we are slowly getting traction for the off-balance sheet transactions. We already did one PTC transaction with Federal Bank, and 3 other transactions are in pipeline. So operating cost continued this quarter also at 3.1%, and this is lowest in the industry. And the consumer loans that earlier, like we were doing, earlier they were funded by Abhiram. Now we got that IT application built on Spandana, and these loans like from 1st April are funded by Spandana, and Abhiram's role is now limited only to sourcing these products and distributing them across branches. Cost to income has been marginally increased from 20.3% to 20.9%. Gross NPA and net NPA stood at 0.54% and 0.11%. So cost of borrowing declined by 170 basis points from 12.3% in this is YOY to 10.6%. Cost of funds on AUM reduced from 8.3% to 6.8% YOY, and this is more because of multiple DA transactions that we have done in the last 1 year. Net interest margin decreased by 130 basis points from 16.7% to 15.4%, despite the cost of funds reducing. Since the yield has come down, the net interest margin has reduced. Net interest income for the quarter grew by 38% to 282 crore from 205 crore. Operating profit before provisions and before tax for the quarter has been 214 crore as against 213 crore a year ago for quarter 2 FY20. Pre-provision PBT for the quarter increased by 7.4% YOY to 205 crore from 191.5 crore. Pre-provision PAT has been 181 crore as against 156 crore for quarter 2 FY20, which is of 15.7% growth. Capital adequacy reduced from 51% to 45% YOY. This is because of on-balance sheet portfolio increasing from 4,948 crore to 5,915 crore. So the DA portfolio, as I mentioned in the last quarter, so post-April, so the banks have not resumed balance sheet transactions. The DA portfolio has reduced from 1,887 crore to 1,439 crore. So as a percentage, our balance sheet portfolio has reduced and on-balance sheet portfolio has increased by almost 1,000 crore. As such, the capital adequacy has reduced from 51% to 45%. So with this brief overview, now I open the floor for questions and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Shivakumar K. from Unifi Capital. Please go ahead.
Yeah, thank you for the opportunity. First of all, congrats for a great set of numbers. Ma'am, just one question on the provision side. You are now maintaining the highest provision in the listed space in the MFI sector. So can you briefly allude to the reason why you have increased the provisions, and do you think these are adequate, and what is your own sense of the final credit cost in FY21? Thank you.
So the cumulative provisions that we have made is like other than standard provision that we have made, so that's about 330 crore. This is equal to 6.1% of on-balance sheet portfolio and 4.5% of the total portfolio. So as I mentioned, that we still have 6% of the borrowers who have not started recovery. So while we thought that we should be able to bring it down this number, but again, like these borrowers are really taking time, and particularly as I mentioned, like Ganjam and also Bhadrak, some of the zones. So it is becoming a little tough in terms of persuading and motivating these borrowers. And again Chhattisgarh, so there was a lockdown in September, so again like Ambikapur, like there are some issues, so sectoral issues, so I think like as long as like we have the 6% borrowers are still not really starting repayment, so we thought that like it is prudent to make higher provisions instead of showing profits at this point in time. So we thought that like whatever the provisions that we made till the second quarter would be sufficient. But again, like when we were looking at September, so we were not very sure in terms of, so we decided to make further provision. So things are changing like from time to time. So be it in terms of borrowers' behavior, be it in terms of the ground level situation. So for example, like first quarter, Orissa was really troubling. So I never thought that like Orissa would really improve this fast. So last month, like the collection efficiency improved by 15%. But again, like initially, like first quarter, Chhattisgarh was doing much better. So, but again, like some ringleader issues, some political interference, and then again, like the intermittent lockdown in Chhattisgarh started creating problems. And then again, Maharashtra, so the Shiva Sena party, like the local leaders, like they started creating some troubles. So with all this, and then again, Spandana has that possibility in terms of like high profitability. So we thought that like when things are precarious, like when there is uncertainty, better like we make adequate provisions instead of just showing profits. And that is the reason like we made higher provision. So it is very, very high, like 6% on balance sheet is really high. But at this point in time, whether it is really adequate, whether we don't want to make further provisions, so at this point in time, yes, this is adequate. But again, things might really change. We never know. So because every state, like it is changing its colors from time to time.
Okay. And how was November, ma'am, the initial 15 days?
November, like this time, particularly South is doing extremely well, like because Karnataka, AP, Telangana, Kerala, like all these states, absolutely like there is no political interference. So these states are doing extremely well. So in terms of political interference, like it's only Chhattisgarh and also Maharashtra, these states like not entire state. That too like Vidarbha, there is absolutely no problem. So it's only South Maharashtra like which is troubling us. And also Chhattisgarh like the Ambikapur and so that particular area like where some political leader like he ended up like taking loans from so many borrowers. So that has created a problem for every microfinance company operating out there. So borrowers started taking advantage out of that situation. But again, like it is very, very small compared to overall portfolio in Chhattisgarh. But again, so looking at the problem at this point in time, like we adequately made provision. I don't think that like going forward, like we have to make further provisions unless and until like something comes up very seriously in the coming days.
Right. Thank you, ma'am. That's it from my side.
Thank you. The next question is from the line of Ajay Sharma from Flowering Tree. Please go ahead.
Yeah. Can you just give me trends on your PAR 0 and PAR 30 last few months? Hello?
So, like it's considering moratorium, basically like we are not classifying any borrower till August as overdue. So the easing is not calculated like till August. So September, from September onwards, like we started doing aging. So we have, so and then again like we, so like we have 6% of the borrowers who have not paid at all till date.
Okay.
So in terms of portfolio, like that's about 5.6%.
I see. And would you want to comment on PAR 0, PAR 30, or that's something you don't want to disclose right now?
Yeah, hi, this is Firoz here. So PAR 0, PAR 30 would not make big difference because till August there was a moratorium given and there hardly means
sure.
All loans are the, yeah. So that is why we are not, there are no numbers to be shared for that.
Okay, got it. Thanks.
Thank you. The next question is from the line of Shripal Doshi from Equirus Securities. Please go ahead.
Hello, ma'am. Good afternoon. Ma'am, my question was with regards to, say, as you highlighted that 6% of the customers are not paying. So, I mean, the collection efficiency that we have given of, say, 110% for the month of October. but what would be the collection that we would have got for the billing of 501 crore? So against that billing, what percentage of collections we have received?
As I mentioned, like the collection efficiency, which is over 100%, that includes pre-closures and also overdue collections. And again, I have also given collection efficiency, like which is minus pre-closures, but which includes like overdue. When the borrowers have closed their loans, like they cleared the past overdues also, like the April, May overdues, like which they have not paid in April, that overdues also they cleared. As such, like those 6% of the borrowers, they have not paid their current installment. Since like these borrowers, they cleared the overdues and also they pre-closed their loan, as such the collection efficiency is over 100%. But however, like if we look at collection efficiency, only minus overdues, minus pre-closures, like that is 98. Of course, like overall, like it is 93%.
Okay, got it. For the month of October, right?
Yes.
Okay. And then what would that number be, say, for August and for July?
It was 88%. August?
For August, yeah.
Yeah.
Okay. And my second question was so we have seen loan officers and, employee number falling vis-a-vis what it was during, at the end of March, at the March end. Whereas what we are seeing amongst the industry players is that they have, hired more number of loan officers for the purpose of, improving the collection efficiency. So what is the reason we are seeing a substantial decline there?
No, in fact, like this quarter, the focus is in terms of hiring loan officers only. So I think during lockdown, like some of the loan officers, like they did not report. So we are contacting all of them back. So some like they felt that like it is not safe to really work like during that point in time, and particularly like MP, some of the staff like who belong to MP but who are working in Rajasthan. So that point in time, cross borders, like it was an issue. Those who did not report on time, like we did not permit them to report like later. But now like we are contacting them back and we are encouraging rejoinings. So this month alone, like so far in November, so like we are doing a kind of like rejoining mela. So far like this month, like 220 loan officers have already joined. So having realized that like and now like we are in a transition. So earlier like the collections were done on bi-weekly basis, and now like the collections are done on monthly basis, and most of the branches like they have bi-weekly collections and monthly collections as well. So in the process, like the requirement of loan officers has increased significantly, because the same village like we are going bi-weekly, we are also going monthly, and we are dividing loan officers like who have to go for bi-weekly collections and who need to go only monthly collections. As such, the requirement has gone tremendously, and having seen that like some of the loan officers, they have not reported, so we are contacting them back, and we have sent SMS to all of them saying that like now they can report back. So we are in the process in terms of hiring and also allowing rejoining for some of the staff who did not report like post lockdown, during lockdown period.
Okay, sure, ma'am. And you highlighted that we have seen some of the states facing political interference, which is leading to collection efficiency getting hampered. So are we seeing any other challenge that has come as a new hindrance for other than political interference?
Actually, during demonetization, so whenever like some massive crisis happens, like political interference always happens. So compared to previous crises, I think like this is the time like we have seen least political interference. Maybe because like everybody is busy with like their own kind of issues. Other than Maharashtra, that too like South Maharashtra, because Vidarbha like several times like the politicians interfered, And again, like whatever that we are seeing in South Maharashtra, like they tried intervening in Vidarbha, but again, like people having already seen saying that like loans will be waived out, but again, like it never happened. So now people are not listening out there. Like they could not influence borrowers in Vidarbha. But again, like they are able to influence like around Kolhapur, Sholapur and that region. So, but again, so at least I'm so happy that like we are seeing this only in certain parts of Maharashtra. For example, like during demonetization, so UP, for example, it was a massive blow, like the entire state. So and again like certain districts of Karnataka and again the MP, so almost like 30% of MP and again like a few districts of border districts of Jharkhand. So we were to deal with like multiple states. I think like this is the time like where political interference is least that I can say. I think that's because of like RBI upfront like proactively announcing moratorium. I think like whatever and media also this time like they have not misinterpreted like RBI's action in terms of saying that like it's a waiver and all. So this is the time that I could see least political interference. It's only certain parts of Maharashtra. Otherwise, like there is absolutely no political interference. And again, Odisha, for example, like the borrowers, when they approached the bureaucrats in terms of whether loans could be waived off, and then again, Odisha, like this is something like which none of us anticipated. And again, like that is because of like over penetration only. Today, for example, like Ganjam had like a 30-40% recovery in May, June, and today like Ganjam and Berhampur, like since the borrowers' husbands like they got back to Hyderabad, Ahmedabad for their work and they started sending payments and like borrowers started paying and like the recovery has hit 95%. But whereas in Bhadrak and Jajpur, like still we are struggling to get back to 80 and 90% recovery. That's because of over penetration there in Bhadrak. Because almost like every borrower has multiple loans. Like Bhadrak has almost like 25 to 30 MFIs operating. So Odisha borrowers like approaching bureaucrats saying that like whether loans can be waived off like because of COVID, like their livelihoods got impacted. But even bureaucrats, like the way that they acted is very, very positive. So they clearly told them that like loans cannot be waived off, like they have to pay back. They should find a way, like they have to get back to the work and at the most like they can approach MFIs for an extended loan repayment period. So I think this time like either bureaucrats or politicians, they behaved quite well. The interference is least compared to any other crisis that I have seen in the last 20 years.
Sure, ma'am. Sure, ma'am. Thank you so much for the detailed answer. Thank you.
Thank you. A reminder to the participants, in order to ensure that the management is able to address questions from all participants, please limit your questions to 2 per participant. Should you have any follow-up, request you to rejoin the queue, please. The next question is from the line of Sarvesh Gupta from Maximal Capital. Please go ahead.
Thank you, ma'am, for taking my question and congratulations on a very good set of numbers. So first question is I didn't get the November equivalent collection efficiency without prepayments, which was 110% for October.
Without pre-closure. So that's about 117% without pre-closures, including ODs.
Okay, so the 110 has moved to 117%.
Yeah.
Okay, and you said 69% is your cumulative collection efficiency. So last quarter, yes, I think there was a 1470 crores sort of a shortfall, and now the correct number would stand. Hello?
85% was the cumulative collection efficiency for June.
Yeah. So now the shortfall is around 1200 odd crores?
The total demand is like 3,000.
Okay. Okay. Understood, ma'am.
1,200 crore.
Sorry?
1,200 crore.
1,200 odd crores. Yeah. Understood. And so 6% of your borrowers are still haven't paid, and how many have paid fully? I mean, so there will be three buckets. One who haven't paid at all, which is 5.6%. Then there would be a bucket where some payments would have come, and the third bucket would be completely irregular. So do you have a split of the second and third bucket?
We have 88% borrowers like who are fully paid.
Okay, understood, ma'am. And last time I think somewhere you had mentioned maybe in the AGM that 3 to 4% is the credit cost that you were assuming at that point of time because of the COVID impact. Now against that 3 to 4%, we have already provided 4.5%. So does that mean that more or less we are done with the COVID provisioning, and next quarter onwards we should have only regular numbers flowing into the quarterly P&L?
So that's what we got to know when we had a meeting with all our state heads. When we asked them in terms of what could be the credit losses, this is the estimated number that I got from all of them. But again, when I looked at the data, so we still have 5.6 or 6% of the borrowers who have not paid even one full installment. So that gives me a kind of feel that it will be higher than 3 to 4% at this point in time. So of course they are confident that going forward in the next 2 to 3 months, so with reverse migration, the borrower spouses, everybody after check this festival, going back, the recovery will further improve in Orissa, Chhattisgarh and Jharkhand. So they're more confident. But however, to be on a safer side, since 6% of the borrowers are not paying, so we thought that it is prudent to make at least a 6% provision. That is the idea behind increasing the provision to 6% of the on-balance sheet. So, but again, if there are no new events that take place in the next quarter, I think we are good with the 6% on-balance sheet portfolio provision.
Okay. And
these have to make further provision in the next quarter.
Yeah. And this bucket of 6% who haven't paid, and the 6% that we have right now who have paid partially. Now that since August, we have seen 3 cycles of collection: September, October, and November. So currently we stand at 6.6 on this post November. But where were we, let's say in September and October for these 2 buckets?
Oh, I think in June, so in terms of number, this is about 1.56 lakhs, this 6%. Number of borrowers who have not paid, this is 1.56. So in June, it was 9 lakh. 9 lakh borrowers who have not paid. So that number, we gradually brought it down to 1.56.
No, last 3 months, how has this bucket behaved?
August, it was 3 lakhs.
So I mean, every month maybe you are seeing a 20-25% reduction on this number is what is.
But again, the same kind of reduction may not happen with the same pace, because going forward, you will have more sticky borrowers who are left, right? So.
Understood, madam. And one more thing which I noticed is since FY19, our ticket size has gone up a lot, almost by 40. From 17,000-18,000 to 27,000-28,000 now. And while the number of borrowers have more or less remained constant, so all AUM growth has been driven by ticket size increase. So what is happening there? Because of course on the ground level, our borrowers are not becoming so much more affluent to be able to afford this higher ticket size much better than previously. So what's the thinking around this point?
No, I'm looking at like previous quarter and this quarter. For example, like last quarter it was 26,611, and this quarter like it is 28,523. The increase in average loan outstanding per borrower is like it's a 7%. So and again from March to November we have 7,80,000 borrowers, 7,20,000 borrowers who closed their loans, and we disbursed 6,40,000 loans. So which means like most of the loans that we disbursed are to the existing borrowers. And for example, like second borrower has taken third cycle loan, and the third cycle borrower has taken fourth cycle loan. So cycle to cycle, for example, like the second cycle, the maximum loan is 40,000. When she graduates to third cycle, like the maximum loan that she is eligible is 50,000. So it is like in proportion to the same. 7% like in a year, in a quarter, like when the borrowers are moving from one cycle to other cycle, like 7% is reasonable. And that too, like when you have more first cycle borrowers joining, proportionately, like your average loan outstanding will reduce. Since like there are no first cycle borrowers like in the last 6 months, because we have not acquired new clients, as such, like the average has not happened. So the average loan outstanding increased by 7%. And I'm also comparing with the competition. For example, Spandana is 26,000, and the largest MFI, like because their average loan outstanding per borrower is 33,000. And again, so the other MFI, like they are at 25,000. So we are not higher in terms of like our peers. So we are like, I think like compared to the largest MFI, so they are at 33,600, we are at 26,000. So which means like we are lower by 20%. Okay. But however, if you compare us like with the 2017, 2018, like we have deliberately increased the loan size. That point in time, our average loan size was much lower, because we were in CDR before that, we didn't have funding, and we disbursed very, very small loan size due to funding constraints, and subsequently to become ourselves relevant and to give like proper loan sizes to our borrowers, we have deliberately increased the loan sizes.
Understood, ma'am. Do you have
Mr. Gupta?
Yeah,
so sorry to interrupt. Yeah, thank you. The next question is from the line of Jainis Cheda from Dimensional Securities. Please go ahead.
Yeah, thank you for taking my question. I just wanted to understand why is there a dip in the disbursements for the month of October despite being a festive season?
Actually, like September we disbursed 900 crore, and October we disbursed 863 crore. So basically October, like last 3 days, we did not do disbursements, like we stopped disbursements. What happened was, like when we were looking at the reports in October, so from last 3 days we decided to hold disbursements. We have taken a call. So on 20th, when I looked at the report, like I found out that there are about 1,50,000 borrowers like who paid installments partially. So while the monthly installment was like, say for example 2,000, like they paid 200 less, like 100 less, whatever, 150 less. So like and again, like the salary structure, the incentive structure was designed in such a way that like if a borrower pays like partial amount, the credit assistant branch managers, like because they don't get any incentive on that. So instead, like we asked all our staff to focus last 3 days in terms of collecting the shortfall amount from the borrowers and explain them, saying that like now the moratorium is behind them, and again, like even if they pay 100 rupees less, 200 rupees less, we have to classify their loans as overdue. So it's no more that like we can classify them as standard, and like we wanted everybody to go and meet like these borrowers who paid amounts partially and make the installment as full. So last 3-4 days, like we did not do disbursements. We wanted everybody to focus on these partial paid loans. Otherwise, like we would have disbursed 900 crore.
Okay. And my second question is that in Q2 FY21, although your collection efficiency has moved up quite well, the COVID provisions have also gone up on a QOQ basis. So any reason for higher provision in Q2 specifically compared to Q1?
Basically, like as I mentioned earlier, that like we still have 6% of the borrowers who have not started repayment, or like who have paid less than one installment till date. So this is bothering us. So while like the number of non-starters have drastically come down from June to August, and again like in the last 2 months, like that number is not coming down at the same pace. So like we realized that like these borrowers are more sticky, and again like we also realized that like places like Bhadrak and Jajpur in Orissa, and again like few parts of Maharashtra, for example Barsi, and again like Ambikapur of Chhattisgarh, I think like so our staff are literally struggling in terms of persuading these borrowers to start repayment, and like we realized that like these borrowers are like really sticky, and we are taking more time. So we thought that like we will bring down this 1.5 lakh borrowers to 50,000 borrowers by last month itself, but we were not able to achieve that. As such, we decided to make a 6% provision, as we still have 6% of the borrowers who have not started repayment. That is the reason like we made 112 crore provision in this quarter, which is almost like 1/3 of the total revenue for the quarter.
Okay. Thank you so much. That's all from my side.
Thank you. The next question is from the line of Shruti Mone from Aditya Birla Capital. Please go ahead.
Yeah, thank you for taking my question. So you mentioned that there are some new branches where new customers are being added. I just wanted to know either quarter-on-quarter or month-on-month, what has been the new customer addition, and how much of the disbursements have come from the new customers?
It's only 45,000 new customers that we added. So there are few branches that we opened just before lockdown. So these branches, in terms of borrowers and portfolio, like they are very small. So they have 100% recovery. So but again, like they don't have caseload to deal with, and they don't have portfolio to service also. So these branches we allowed to acquire new clients, 45,000, just 45,000 in the last quarter. New clients added.
Okay, and how about October and November? This number includes that?
No. 45,000, like it's only June, July, September.
Okay, and October, November would be how much approximately?
I think maybe we like 1 lakh new clients. We have more branches doing new group formation.
Okay.
This quarter.
Okay. So this is expected to reach new customer acquisition is expected to reach pre-COVID level by December? Month on month?
No, it may take some more time. I think maybe January, February, March, like we will reach to pre-COVID, but not December.
Not December. Okay. Yeah. Thank you. That's it from my side.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Deepak Podar from Sapphire Capital. Please go ahead.
Yeah, thank you very much, ma'am, for the opportunity. So just wanted to understand, like in terms of your AUM. Any comments do you want to make, like AUM growth, what we are looking at maybe this year, next year, would be helpful. Time.
Sorry, could you repeat? Like I did not get it.
So just wanted to understand in terms of AUM growth. So what we might be looking at this year and next year. So any comments on those lines would be helpful.
So the AUM grew by 519 crore. So it was 6,835 crore last quarter, and it grew to 7,354 crore. So it grew mostly in AP, Telangana, Karnataka, so some portfolio in few zones of Orissa as well, and Maharashtra. So it is like from, as I mentioned, that like we disbursed 900 crore in September and 863 crore in October, so to the existing borrowers. So it's from new disbursements that we have done in the last quarter.
Mm-hmm. And how we are looking at, for example, in FY21 and 22 in terms of AUM growth?
AUM growth, I think, so we will be hitting 8,500 to 9,000 crore by March.
Mm-hmm. Okay. That's it from my side. Thank you very much.
Thank you. Next question is from the line of Abhijit from Kotak Securities. Please go ahead.
Yeah, hi, good afternoon, ma'am. Just one clarification. Of the customers who would have used moratorium, what has been the behavior so far in terms of, these borrowers coming in and repaying their earlier loans? Because now there is no compounding interest, so there's no incentive for them to, repay or prepay their earlier dues. That was question number one. And on the same set of borrowers, what would have been the average extension of duration of loan because of the moratorium?
I think so. Those who those who had the positive intention. So basically, like rural, the livelihoods were not impacted even during moratorium period also. So their livelihoods were not impacted because agriculture income was very much intact, and again dairy income was very much intact. It's only like in a few urban areas, like some of the businesses, like they were not able to continue and they had their livelihoods impacted. So if urban borrowers wanted to avail moratorium, like there was some sense, but again most of the rural borrowers, like if their intention was positive, so they always paid back. So those who did not avail moratorium, like they continue to pay back. Those who availed the moratorium, like it's little difficult in terms of persuading them to resume collections. So like there was absolutely no problem in terms of continue to repay the installments by those borrowers who did not avail moratorium. It's only those borrowers who fully availed moratorium, who did not start repayment during moratorium, had little difficulty in terms of starting to repay because like they took a long break. For them, like they got a kind of advantage, and of course, like there are some borrowers like who always want to take advantage out of the situation, in spite of like their cash flows allowing them to repay. And what we have done in terms of repayment is like almost other than the 6% of the borrowers, 94% of the borrowers on an average. So out of 5 months, like they have not paid, on an average they have not paid 2 months, they paid for 3 months. So the average tenor got extended by 2 months. For example, like as per the original schedule, if the loan is getting closed by December, now like we have given them another 2 months, like as per the revised schedule, the loan will be closed by Feb.
Sure. This is helpful. Thank you.
Thank you. The next question is from the line of Vibha Batra from Fair Connect. Please go ahead.
Thank you for taking my question. My question is on current collection efficiency. So if you were to take it for September and October, can you please highlight what is your current collection efficiency without taking prepayments into account?
You are asking for collection efficiency without prepayment?
Current collections against current billings without including the prepayment for September and if possible October.
September it's 103 and October 110%. This is without pre-closures and including overdue collections.
Would it be possible to get it without overdues, only the current collection efficiency?
This is 93% for October.
93%. Or that means if we were to exclude those 5.6% who never paid, there were hardly any clients who didn't really pay their monthly or 15-day. Okay, that's a pretty good number. And then I wanted to check, so if we were to take 30-day plus in October, what is that number, and is it in line with what it has been pre-COVID levels? If we were to exclude this 5.6% cost, adjusted for that, is that number in line with what it has been historically?
Yeah.
Firoz here. The numbers are in line with the pre-COVID level, if you see 30 plus, because there, till August there was a moratorium given to the borrowers, and from 1st September it was treated as they are paying as a normal installment. So if you see by September end, the 30 plus would be it's a pre-COVID level.
Okay. So 30 plus is at what level in September and October?
It's about 30 crores, I believe, in absolute terms, and percentage-wise, I'll just let you know. Give me 1 minute.
30 crores, that's fine. This is as on September?
Yeah, September.
Okay. And one more question, last one. What percentage of accounts were given moratorium? You can say percentage costs were given moratorium at any given point of time during these 6 months?
So as ma'am said, till June we had a 9 lakh borrowers who have not paid. So moratorium 1 was availed by around 9 lakh borrowers, and moratorium 2 was availed by around 3.5 lakh borrowers.
But these won't be mutually exclusive. There will be some bit of overlap also, no, between
Yes.
9 and 3.5?
Yes,
so
yes,
if you were to take the cumulative number, it will be less than 12.5 lakh.
Oh, there is so much of overlap, like we cannot add them.
There will be overlap, no ma'am?
Yeah.
Okay. Fair enough. Thank you.
Thank you. The next question is from the line of Sarvesh Gupta from Maximal Capital. Please go ahead.
Thanks for the follow-up, ma'am. One question on the AUM growth. I think you said 8.5 to 9,000 crore. So that is almost a 25% increase from last year. Did I hear it correct?
Sorry?
You mentioned AUM and AUM for FY21 guidance at 8.5 to 9K crore.
Yeah.
So that is around 25% up from last year. Is that what we are targeting, ma'am?
Yeah.
Okay.
Yeah.
Okay. So that is one. And secondly, again on this 5.6%, which is getting sticky, and we have already provided 4.5%. So maybe the right way, and given that in October we collected 93%, which means that out of the guys who are paying partially, maybe out of those 6% sort of customers, maybe 1% of the bucket is still not paying. So maybe 0.5% slippage from that side, and if we add this 6%, so around 6.5 should be the maximum credit cost on the AUM basis, and out of which 4.5 is already provided. So worst case is like 2% more COVID related provisions in the coming 2 quarters. Is that a right way of conservatively looking at the things as they stand right now, ma'am?
We have provided 6.1% of on-balance sheet. Like we don't have to make any provision on DA portfolio. So like just to give some understanding, like we have done the calculation, which is 4.5% of overall balance sheet. But again, we don't have to make any provision on the assigned portfolio. But otherwise on our on-balance sheet, like which includes the PTC portfolio. So PTC portfolio more or less like that has a 100% guarantee, because the over collateral and again cash guarantee and everything put together, like that's about 30%. So as such, like there is a 100% guarantee given on PTC portfolio. So PTC is included in on-balance sheet portfolio. So that is 6% that we already provided. So as of now, we feel that like it is provided.
I'm on the PTC also. We'll have to take a hit of 10% first loss or something like that. So where
for DFFI, like the way these are structured, I think like it's almost like equal to term loan only. Like we have to take 100% hit on PTC. Only DA like we don't have to take any hit, but PTC like we have to take hit.
So that also will come in one of the line items in P&L, right? If the overall slippage is more than 6%.
No, generally like because it will come in the cost of fund. So.
Okay. And does that get balanced against your 10% margin cap?
Sorry, come again.
So since you have a 10% margin cap and this slippage on the PTC side, does that get balanced against that? So you can technically charge more on those accounts or something like that?
No, we can't do that.
Okay, so it will result into lower names in a way.
Yeah.
Okay, understood, ma'am. Thanks a lot.
PTC portfolio is only about 350 crores.
Yeah.
Of the total balance sheet.
Understood. Thanks a lot. Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Rajiv Mehta from Yes Securities. Please go ahead.
Yeah, thank you. Good afternoon, ma'am. Ma'am, just one question on the liquidity and the funding of the growth that we are targeting in this year. So we're still looking out for 15% expansion in portfolio. How is the funding availability to fund that kind of a growth? Because as I see, the liquidity in the balance sheet is quite, something that you would want to maintain. So if you can just take us through the incremental funding that you're looking at and the availability of it, and what could be the possible sources to fund this kind of a growth?
So we have almost like 3,000 crore functions in pipeline, and again SBI has promised to resume direct assignment transactions this month. So they have committed almost like 2,000 crore kind of direct assignment in the next 3-4 months. So if that happens, I don't really see any problem in terms of liabilities, raising liabilities. But again, I don't say that like it is as easy as it used to be. But however, like the market-linked instruments like that has opened up. As I mentioned that like we already raised 350 crore through NCDs, and then again like today also we raised another 75 crore, and again like next week like we are raising another 300 crore. So that source like is a kind of new opportunity that has opened up for microfinance organizations. So like so many wealth management clients are participating and are investing. So that is one new opportunity. But however, like unless and until like the banks really resume like PTCs and DA transactions, it is tough. But we are optimistic since we are doing well like in terms of collection efficiency. So I think at least like for our size the organizations, liabilities should not be an issue. Generally, banks like will come back aggressively like in the third and fourth quarters. We are optimistic that we'll be able to raise.
Thank you. And one more clarification, ma'am. When you report collection efficiency with overdue collections, so I see you collecting even overdues in October and November. So typically, I would have assumed that the overdue would have got collected in September, and then the new schedule would have gone to the customers, just asking them to pay the current installment as per the new schedule. So are we still asking even in October and November over and above what they have to pay as per the new schedule?
Actually, we have not given new schedule in September, so we have given new schedule only now this month. So whatever that they have cleared, like pertaining to April, like even till last week, like we considered them as overdues only.
Okay.
But now, like they are appearing as current installment. So from now onwards, like we cannot consider them as overdue because they got extended tenor and they will appear as current installment.
Yeah. Thank you.
Thank you. Ladies and gentlemen, due to time constraint, that was the last question. I now hand the conference over to Ms. Padmaja Reddy for closing comments.
So we thank you all for your time and look forward to meeting you again all for the next quarter. Thank you. Thank you so much.
Thank you. Ladies and gentlemen, on behalf of Spandana Sphoorty Financial Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.